They are starting to generate cash. What really worried me about those numbers was the margin dropped from 16 to 8%. That's a huge decline in the margin. And the question is can they get it back up again, and how long to get it back up? It's one thing if the cash starts flowing, the business starts coming back, are they going to be able to get those margins back? And that's what worries me around those numbers. I mean, as you said, not a surprise that they were ugly, but that margin falling 50% was a shocker.
Just showing that increased competition also creating a little bit of a problem. But Ceramic Industries came out with a trading update and says that headline earnings per share are expected to be between 30% and 35% higher. Quite surprising for me, because obviously when you look at the exposure it has to the construction sector and to the residential sector, you really you're wondering if we are seeing a robust improvement in those sectors. But they do say that they've got improved performance by the Australian operations. Do you think that that was just one of the big movers there?
Australia must have helped, but frankly they must have done something special, because make no mistake, we know about construction, we know about the consumer, we can see it in every other company set of results. They came completely against the trend by a huge number, and they've done obviously something very smart. They talk about how they've got some efficiency goings and product lines and stuff like that, and we want to drill into the numbers when they come through. But my sense is that tough times really pull out the good from the average, and that the surfaces that in ceramic they really pulled some rabbits out the hat. Those numbers are astoundingly impressive, even considering that Australia helped them. It couldn't have helped that much.
Because it's quite a big increase there. But we've also got GDP numbers out tomorrow. Simon, what are you expecting there? We know that fourth quarter is expected to grow by between 2.5% and 3%, which is quite high in comparison to the third quarter, where we saw growth of 0.9%.
I think in your earlier guest was saying it, we're looking for about 2.7, and it really is going to be inventory stocking up. Inventories were run incredibly down. We've seen a bit of it coming through. We've seen the manufacturing data sort of hinting at that coming through, and I think it's going to be a case of creating the inventories, getting those levels not back up to sort of 2007 levels, but certainly getting them up to more comfortable levels, and that's going to be a very, very big driver behind that number.
Just looking at the commodity space, we've got Implats down 1.3%. Anglo Platinum took quite a big knock, 2.5% in the red. No surprise, it's really about the euro dollar, all the movements that we've been seeing there in the commodity space. On the other end, we had African Rainbow Minerals up, as we said earlier, 3% in the green. Lonmin a gain of 2.3%. So really a mixed bag today.
Very much so. I think Implats and to a lesser degree Anglo-Plat run hard, particularly Implats. We can use the cliche profit taking, selling whatever we want it to be. Certainly it did run very, very hard, getting smacked down there. African Rainbow, the numbers were okay. I just, my sense is that it's a sort of second tier. If you want a diversified miner, really you look at Anglo or Billiton, my pick there, and African Rainbow really second tier, but they pulled the numbers out and the market liked them and pushed them up.
Harmony Pomotsi, interesting space, and we heard an announcement today that the deal has finally gone through and it's now stable. We had our Harmony gaining 0.6% today, really in line with what we've been seeing with the other gold mining companies.
Yeah, look, the Pomotsi makes no sense. I mean, it's an old deal today. They're basically saying it's a done deal. They've gone through all the hurdles and everything. But my sense is it's going back in time. It's going back to dodgy mines, to marginal mines, to deep mines, to all the sort of stuff that South African miners, certainly if they're not, should be looking to get away with. The problem with our mining industry is that our mines are incredibly deep and incredibly difficult and hence expensive. And I think the Pomotsi assets really fall into that class. I don't know what Harmony wants with them.
And of course, with NERSA set to announce tariff increases on Wednesday, that's just another issue for the mining industry itself.